Good afternoon, everyone. This is Tim Hilligus from Clayton & McCurvey. We want to welcome you to our PPP loan program. And I think similar to kind of the past ones, we're still seeing quite a few people trickle in, and I'm just going to keep an eye on this. Maybe we'll wait 1 or 2 minutes just to get a few more people that are in the queue to get signed up. I know we're 1 hour earlier than we used to have these back in June when they were 3 o'clock. So hopefully everybody's catching on, but I'm watching the counter go up pretty quickly. So we'll take just 1 minute. Hang on. Hopefully you're all set and ready to go, and we'll get started in a minute. Ben, give me a thumbs up if you can hear me. And go ahead and say something, Ben.
Hi, Tim.
Hi, Tim. Perfect. Thank you. My headset died on me, so.
Okay.
Yeah. Everybody's going to see my COVID hair now.
Mine too.
We're going to wait 1 more minute, guys. Just 1 more minute. I can still see the counter and people in the queue, so we'll take 1 more minute and then we'll get going. Well, that's going to be tough, Ben. I'm getting updates through other programs. I'm going to try to turn those off, but we'll deal with them.
All right.
All right, we're going to go ahead and get started. First of all, welcome, everyone. Appreciate your participation. It does feel a little bit like deja vu. I remember Sarah Russell talking about, I think it was Groundhog's Day, the movie. We're probably all in the same boat we were back in June, maybe stretching our wings a little bit and spreading out a little bit. I know some of us have been able to get in the office occasionally and as well as visit clients. So it does help change the monotony a little bit. For those of you first time joining us, my name is Tim Hilligus. And back in May and June, we started hosting these live videos regarding the payroll protection loan program. Back then, we were talking about the process of applying for the loans and all the changes that were occurring throughout it with respect to qualifications, restrictions, and things like that. And for those of you who were with us from the beginning, you know, it seemed like every week there was something new that happened. So want to welcome you all to our discussion today. We'll take a brief moment to introduce everybody. So obviously, those of you who just joined, you can see I've got my COVID hair. I haven't had a haircut yet. Ben, the COVID did not have that much of an impact on. He's looking the same, handsome as he always does. But Sarah Russell has completely been impacted by the COVID. Never seen her looking so rough as she looks today. Oh, sorry. That's Jim Beal. Jim Beal, one of my partners. You got to make light of this stuff, you know. It's a horrible kind of this topic. But Jim Beal, one of our senior shareholders at Clayton McCurvey, Jim and I really work on the same type of clients, same type of projects. And Jim's been knee deep in this process, assisting clients with the payroll protection program forgiveness applications, from assisting and reviewing to preparing. So hopefully between the three of us, we can answer any questions you have as we kind of go through this topic. Let me kind of share a little agenda with you. We'll talk a little bit about where we've been, where we're going, where we think we're going, a little bit about housekeeping. We've got some favors to ask of you. Kind of go back in time a little bit on a refresher, and then we'll talk about some of the updates between interim final rules, some new applications, and a lot of the frequently asked questions that have occurred, and open it up for questions if we've got enough time at the end. So for those of you who haven't been here, let me give you a little bit about the housekeeping. This program allows you to ask questions. You'll see a question bar, hopefully in the right-hand side of your screen, that'll allow you to ask questions. But more importantly, within those questions is an ability for you to vote or to upvote a question that might be relevant or important to you. If you click on that little triangle, that lets Ben and Jim and I know that your question is important, or the question that someone else has asked is important. So for us, that's going to help us prioritize. We've got 1 hour. We have run long previously. We can run a little bit longer today. We'll try to get through as many questions as possible. But the other thing is we've kind of planted a few questions in there for our purpose. And those are some questions you'll see from Denise Asker related to where you're at with your loan process. So, from our perspective, we'd really like to know whether you've applied, whether you've received forgiveness, whether you've just received approval from your bank, or whether your bank's even accepting applications. So if you can help us with that, it'd be great. So,
just one comment there too, Tim. So Denise put those 4 questions in first. So going back to your comment, if you click on the date button and sort, you should see those 4 questions that we're asking float right to the top for you.
Beautiful. Thank you, Ben. So again, please use that upvote. And if you don't see your question, by all means, go ahead and ask that question. Some of the questions we're going to answer live, you might see a little green box on there where it says Jim is replying. So hopefully some of those will get answered offline. But if the question's hopefully strong enough, relevant, or topical to the section I might be discussing, what we'd like to do is bring it up to the group directly, and we'll kind of share that question and maybe have some dialogue amongst the 3 of us. All right. Loan counts. So this is something Sarah had shared with you guys kind of from the beginning. It's up a little bit over from where we were in June. And from our last, actually that date, June 12th, there is incorrect. This should have gone through the final loan application date. But we ended up about $525 billion of loans. That left $134 billion that still was not used. So within that PPP program, $134 billion unused, $525 billion used. As far as resources go, this question's come up a lot. Where do we get a lot of our information? I want to share this with you. The treasury.gov website is really a great spot. There's a red bar that clicks up on your screen that talks about PPP resources, and it's broken down into different categories within the screen. So you've got the borrower section, which is where you're going to find your applications for forgiveness. And then it's got down below, you'll have kind of the updates that have occurred, and I've listed those updates. So this is, for those of you who hadn't been through our prior PPP live videos, we've been dealing with a lot of change. 25 interim final rules through today, 52 frequently asked questions, and we're already at a total of 27 frequently asked questions on loan forgiveness. And the SBA has broken those down into groups by general, payroll, non-payroll, and reductions to forgiveness and EIDL. One nice thing that's happened, I'll just say this, there were many unanswered questions we had throughout the process of dealing with the applications and the start of the forgiveness process, and more of those questions have been answered. There's still a few that have not. So, we're still going to be dealing with potential updates, and I kind of have a warning slide later that says what should you still be keeping in mind, and keeping your data and your records accurate and at hand are going to be important, especially if there's changes that come about in the time span from the time you might submit your application for forgiveness to your bank and the time that you might ultimately get forgiveness from the SBA. So I want you to keep that in mind. So back to those questions we popped out there. We're very interested in where you're at in this process, so if you can help us with that would be great. And I thought I'd share a little bit of experience, and Jim and Ben, feel free to chime in. This is where I thought we were at through today. We know that some banks are not accepting applications for forgiveness at this time. There's one major local bank that kind of laid out a timeline that goes all the way through January of 2021 for accepting applications for their smaller loan clients. I'm aware of other major banks in the area that are doing this on a case-by-case basis. They're testing their system, and so they're accepting some client applications at this time. And there's banks that are fully accepting applications. All the banks I've talked to, at least the ones I've directly talked to, are using some third-party reviewers. So that's adding to their timeline. The banks have 60 days to review your application. And my understanding, at least in one local bank I talked to, they were taking about a 2-week lag in reviewing loan documents or the forgiveness documents and the application. So that may give you a little bit of guidance. One of the things that was clear across the board in talking to the bankers and in talking to our clients, the rule changes, the rent one was a big change where when they pulled the affiliate rent out of the qualified expenses, that slowed everybody down from the standpoint of having to expand their covered period from 8 weeks to beyond. And as of right now, I'm not aware of any clients that I have, and maybe Jim or Ben can chime in as well. I don't have any clients who've gotten either a bank approval at this point, nor a SBA approval. Obviously, the SBA approval would go without saying if they haven't got bank approval yet. So, Jim or Ben, any thoughts on that?
I think everybody that I've seen is in the same boat as what you've described, Tim. So no approvals yet from the bank side either. Couple of submittals, but those are relatively few and far between.
Okay.
I haven't had any that have been submitted or accepted. I have had some clients that I've talked to that are ready, meaning that they're at a point where they can get forgiveness. They have the right FTEs. They have submitted to the bank to try to protect their position. I haven't heard back as to how the banks reacted to that. We'll have to see how that goes, because that could be an issue if they're delaying acceptance of the applications until a point where you're losing some of the forgiveness.
Good. Well, I think, and I suspect those of you will be interested in your answers to see where we get towards the end. We'll take a look and see where we're at. If anybody actually has gone through this process, maybe there will be some success stories in there. Big unresolved questions or big unresolved issues. Will there be another stimulus package? I think both the House and the Senate have submitted different packages. I know earlier this week, there was some discussion about some negotiations between the executive branch and the SBA and the House bills. I still think we're pretty far apart. I know the president did come out and say that he's not interested in reviewing stimulus bills, but he would be interested in something that put money directly into taxpayers' pockets. So, I don't want to call it a line item veto, but he was going to be very narrow in what he was going to consider to review before the election would occur. And of course, right now, I'm assuming the SBA is stretching their authority, or what Congress's approval or Congress authority they're given. They're the ones that really came out with this de minimis or this floor for forgiveness, this new 3508S application to allow for those who borrowed $50,000 or less. I think in our last discussions back in June and through some of our blogs or newsletters, we've mentioned that both the House and the Senate have discussed a $150,000 kind of forgiveness level. I want to be clear, for those of you who looked at that application, and I did look at our attendee list, there's quite a few self-employed individuals on there, consultants I know for sure, that probably mathematically are at that $20,800 level for self-employeds. You still have to submit documentation with those applications, but the nice thing is I guess you're essentially getting a green light on the forgiveness as long as you fulfill the application, fill out the application completely, and provide the supportive information that you need. Two tax issues that we've been worried about probably since day one. Will we get forgiveness? Will we get deductibility for the expenses incurred that result in forgiveness? For our C Corps, we've talked about that. That could be a 21% savings versus a 21% cost if you can't deduct these items. For some of our other clients, it could be as high as 37%. That's the highest individual bracket. So really important, if we get any movement on this, be great that this becomes deductible. We've talked about it before. Both the House and Senate have said their intent was that these expenses would be deductible, and it really wasn't until we got clarification from the IRS applying kind of the grant tax rules to this loan forgiveness that we discovered that they were not going to comply with Congress's wishes, and since it wasn't stated in the law, we're stuck with the current situation of these items not being deductible. And then there's that uncertainty of what happens if your forgiveness happens in 2021. I mentioned there's a bank that's put out a table or a list of when they'll start accepting applications. If they're not going to accept applications till November, and it takes them 60 days to approve, and then it takes SBA another 90 days to approve, we'll be getting forgiveness in 2021. And we're not sure what kind of matching there might be with the expenses incurred in 2020 and the forgiveness occurring in 2021, how that might play out on your tax return.
And I think, Tim, that was probably the most upvoted question right now is that time, as far as whether or not this will be tax deductible.
Yeah.
We did our quarterly estimates. Most of the situations we had to address that. So the issue is if we get forgiveness in 2021, do we have to go back and amend the 2020 tax returns, and are we going to get hit with underpayment, penalty, and interest? So you need to factor it in on your quarterly estimates currently in anticipation of what might be the forgiveness, because you could have to go back and amend and could have underpayment penalties. We're hoping for something to come through to give us guidance that would say that we would be exempt for that, but that hasn't come out as of today.
I think that's a great point, Jim. And not that I want to say if it were me, but with tax filings, you do tend to get some hindsight. And you think about it, our first real tax deadlines are March 15th. March 15th for our flow-through entities. Those are our S-corps and our partnerships. April 15th is the first deadline for our individuals and our corporate tax returns. And then, of course, you get your 6-month extensions if you request those. So, we could have potentially, I hate to say this, uncertainty through September or October of next year. And my guess is, with this being an election year for the president, there's a lot of moving parts here, and you're going to have a lot of changeovers potentially in Congress where they're going to pick this up and inherit this. I could see this going into 2021 without any with some uncertainty moving forward.
But I think the key there, Tim, is that it's the underlying expenses. When did you incur the expenses that you put on your forgiveness application? That's gets denied. Not that I got forgiveness and I pick up income at that time. I have to go back and reduce my expenses back in the period that they were paid. So unless you're safe harbored, if you're doing any exact calculations during the year, you've got to look at when the timing of that occurs, because you could have some issues.
Yeah, I think what I do think is clear is, the thing that triggers the non-deductibility is the non-taxable income part. So if you're looking at the timing of this, your expenses right now are deductible, and they don't become non-deductible under the rules until you've got a forgiven. If you've got a loan that's not forgiven, or the SBA or your bank rules, hey, you didn't meet the requirements, we're not going to forgive your loan, your expenses are fully deductible and your loan is fully repayable. So good. Well, and we'll probably come back to that. I'm sure that question will keep popping up more and more. So let's move on. Just a quick refresher on the last act that was passed. That was the Payroll Protection Flexibility Act. This one probably had the biggest change to what we were doing up to that point. This allowed those who weren't going to achieve full forgiveness in 8 weeks to go out beyond 8 weeks up to 24 weeks. And we've learned through some of the both the interim final rules as well as the frequently asked questions, the methodology to apply before the 24-week deadline or December 31st, whichever one is earlier. So that really allowed a lot of people who weren't going to meet that full forgiveness at the end of the 8 weeks, because perhaps maybe their rent or utilities didn't quite equate to half month's worth of payroll, gave them a little more ability to meet 100% forgiveness. It reduced the payroll requirement from 75% of the amount requested for forgiveness down to 60%. That's a great move for people who ended up using those expenses for things like rent and utilities and mortgage interest. Amends the term of the loans, and if you remember what we talked about before, you got this deadline, this June 15th, where your loans would be 5-year notes technically, but before, sorry, I said June 15th, I meant June 5th. Before June 5th, you would have been dealing with the 2-year note. And so, ensuring that you talk to your bank about if there's an amount that's not forgiven and you applied for your loan before June 5th, trying to ensure that you could still qualify for the 5-year minimum payment. And it brought to kind of fruition, or brought up, the fact that you could have some barriers or detriments to getting back to your full-time equivalents, and creating more safe harbor or more options to achieve full forgiveness versus what the original rules were. So those were some really good things. Now, the one thing that my clients really didn't I don't believe take advantage of, but there was that deferral of the payroll taxes that was eligible under the CARES Act. There was an original restriction. If you applied for a PPP loan, you were not eligible to take advantage of the payroll tax deferral. And the Flexibility Act allowed anyone, in particular the PPP loan recipients, to qualify for that deferral of payroll taxes. And again, I'm just going to say, I don't think I had any clients take advantage of that. I think their positions were, the cash is available, I paid the payroll, and I'm using ADP, Paychecks, Paycom, Paycor. All those organizations were using them, and it's part of that automated process. So let's kind of cover what's new. So since our last meeting, there were 6 interim final rules, and this is kind of a brief discussion about what some of those brought to our attention. Now, there's 2 that I don't know that they're relevant within my client base. They may be relevant within our audience. By all means, chime in if there's something here that you'd want us to go into further detail. The 2 that I'm kind of just going to glance over are the clarifications on the criminal records and those under indictment or under parole restrictions, and those for fishing boat owners. While Michigan is a great boating state and probably has a lot of fishermen, within our client base, we don't have anybody where that interim final rule would play a factor. But the most prevalent one is going to be the rules adjusting the loan ratio of payroll expenses to total expenses to 60%, and then the limits for the owners going to a 24-week payroll. So if you look at what happened going from 8 weeks to 24 weeks, for your everyday employee, that would expand the maximum compensation that could be considered eligible as a payroll cost of 24/50 seconds of $100,000 of wages if you went out to 24 weeks. But they put a limiter on the owners. Kind of looking back, that owner's compensation was capped at $100,000, and the borrowing base equivalent was 2.5 months. They came up with this $20,833 limit that owners would be capped. So, if you go to week 9, 10, 11, 12, and so on, you're going to have limitations probably around week 11 that would terminate your ability for an owner earning over $100,000 to continue to have a qualified payroll expense. I think Ben and I did the math. It's around 10.83 month mark, which puts you almost right to 11 months. So that's one of the things that came about or was clarified within that. Obviously, the loan forgiveness and the loan review procedures for those at $50,000 or less, again, that becomes the S application for forgiveness. So you got the standard application, the easy, and now the S. And again, looking at that forgiveness application, you got to qualify to meet it, be less than $50,000 with yourself and your affiliates, and then also provide the supporting documentation for the amounts that you're claiming forgiveness for the qualified expenses. Then we've got the owner forgiveness and certain non-payroll costs. The biggest one here, this probably had the biggest impact on our client base. That was the elimination of or I'll say the reduction of affiliate rent. In essence, looking at affiliate rent as on a consolidated basis, and therefore only qualifying for the mortgage interest applicable to that loan. There's some other restrictions in there where you've got maybe shared space or shared rent, and that's prorating the actual qualified expenses, either netting against a sublease you've received the income from, or prorating where you're sharing space with somebody else. But for my clients, the self-rent elimination really pushed most of them past the 8-week application period and pushed them into, in some cases, up to 12 or 13 weeks is where we're at because of that elimination. And one of the most recent ones was the most recent interim final rule related to the forgiveness appeals process. So what happens if you don't like the results or you don't like the answer? If you don't like the answer that your bank gives you, the interim final rule provides guidance with respect to, you would appeal to the Small Business Administration, you appeal the SBA for any decisions you didn't agree with on your bank. And if the SBA then further had a decision that you didn't agree with, within the SBA is the Office of Hearings and Appeals, and that would provide you that recourse if you don't like the answer you're getting. So any comments on those items, Jim or Ben?
No, I don't have any.
No. I guess the one big thing, that goes from 8 to 24 weeks is people don't realize that in the 24 weeks, you can have expenses dramatically higher than the loan amount or the PPP forgiveness amount. And that comes up continuously when I'm talking to people and reviewing their applications. They think that when they go to the 24 weeks, they're still capped at the PPP loan amount. So that's a critical piece of information to know. And that's why most people are seeing significant rise in forgiveness based upon going to 24 weeks.
Right. And kind of piggybacking on that, for those who maybe can't meet one of the safe harbor requirements, either somebody offered a job to come back and refused, you couldn't find gainful, qualified or similarly qualified people to bring back to fill those FTE reductions. That's one of the strategies most people are using right now is making their pot of qualified expenses larger to cover any reduction in forgiveness that might occur on their application. So, that's just one of the strategies that's being utilized. So that's a good point, Jim. And then, I do have my last bullet point here. The 3508S loan forgiveness application introduces a process, a new form to hopefully fast track. Although, in the one bank that I mentioned that has put out a timetable for when they'll accept applications, it happens to be those 3508S's that they're forecasting that they will not be accepting those possibly till after January of 2021. So, those smaller applications, depending on your bank, may or may not be pushed back further for their larger clients and their larger borrowed clients. You got to remember, one of the arguments or one of the issues from the banks from the beginning, and probably justified, is these loans have tied up their ability to lend traditional funds. And so where they've got this pool of loans that is likely to receive forgiveness, they want to accelerate those large loans as much as possible, get those forgivenesses processed through the SBA and get paid in full from the SBA so they can replace those loans out in the market. What's come about from the frequently asked questions? Again, this is just some better clarification. The first one is probably the one that I think, for those of you who were on our calls back in June, that there might have been maybe a little disagreement between Sarah and Ben and myself. And I still have seen it in talking to other professionals, but the FAQs, I think, make this clear. Now, let's be clear. FAQs do not have the authority of law like the interim final rules do. But for those of you who remember the issue with respect to foreign employees and foreign-owned companies, if you remember, there was an FAQ that an interim final rule basically treated as or solidified it as a final law. So, I think what I would take from that issue on the foreign-owned companies is, from the SBA's perspective, they view these frequently asked question and answers as good as law. So that's why I like this first one. The first one relates to that cutoff period, that initial payroll you might pay in your covered period that includes wages earned before your covered period began. We had discussed it. You have to really do true accrual accounting and prorate that and eliminate the wages that were paid in that period that were actually incurred on the days before your covered period began. And the FAQs say no, that's fully qualified. So, similar to what we talked about with rent and non-payroll expenses, there's a chance you actually could have expenses that go beyond your covered period because of the fact that you don't have to have this cutoff related to payments made in your covered period that cover incurred expenses before your covered period began. One of the other things it discusses, and I have had this conversation with clients, can I pre-fund my profit sharing or pre-fund our 401k plan? And what the FAQs are saying is you can't accelerate those retirement costs. They got to be related to those that are incurred. So if you've got a matching process within your payroll, that's fine. If you've got a process to, I would think, accrue or identify profit sharing that's earned within those weeks versus what you might take on your entire 12-month tax return, you probably could prorate a profit sharing contribution for your 8 to 24 week covered period. But the FAQ is clear that you should not be accelerating expenses from outside your covered period into your covered period. Healthcare costs are net. That was an open item. Would healthcare be at the gross cost? So these are net of reimbursements you get from your employees or any co-pays that employees provide back to the company. We talked about the owner compensation limit to 2.5 months. There is one other qualification in there, and that's the limitation on what you earned in 2019. So if your wages were less than $100,000 in 2019, and we're talking about that 2.5 months maximum that would be allowed for an owner in the covered period, if your salary was lower than $100,000 or your Schedule C income was lower than $100,000 or your guaranteed payments or self-employed income from your K-1 from your partnership, if those were less than $100,000, you need to reduce that proration based on 2.5 months of that amount from 2019. So I'm going to look to Ben for that one to see if I get a head nod. Ben and I talked about that this morning. Did I get that one right, Ben?
Yes, I think so.
Great. All right, what do we got next here? So this one, I think, just as a second clarification. I don't think this was ambiguous, but in the FAQs, they address unsecured credit is not, the interest on unsecured credit doesn't qualify. So these would be installment loans and mortgages that are secured by the product or the asset that was used to acquire them. So that's clarified. And then renewals of leases or refinancing of debts that were in existence, those do not result in what I would call as a new item that wasn't in place on February 15th, 2020. If you recall, for payments like this, there had to be an agreement. You already had to have had those mortgages or those installment notes or those leases in place on February 15th of 2020. Just by happenstance, if you refinanced or renewed leases during your covered period, that would not be considered a new lease and therefore not in existence at February 15th, 2020. So we got some clarification in those situations of refinancing and renewals. And then we've got a little more expansion on the rehire. I mean, we talked in the past about what happens if somebody doesn't come back to work. They just choose not to. What if they take another position? What if they die? We talked about all those. So one of the FAQs covers the fact that you might have a decline in full-time equivalents for somebody who chose not to come back to work. And remember, in order for that to qualify, you need to remit their information to the state unemployment agency within 30 days of that rejection for coming back to work. So that's an important caveat for that employee, that reduction in full-time equivalent to qualify. And the other is an inability to rehire a similar qualified person. So I've done a lot of talking. My next slide kind of pushes it over to Ben. And Ben, maybe with some of the math changes, some of the things that have been clarified, especially with owner compensation and people going from 8 weeks to 24 weeks, you could address what some of the changes are to the finance model that you put out there for people to utilize.
Yeah, sure. So the last time that we did one of these was prior to understanding that we could choose or select our covered period and end it at any point between 8 and 24 weeks. So since the last time we talked, and on our website, by the way, you can find an Excel model that we put together that you can download. There's also a video out there that kind of explains the model. But there has been one update that has been made to this model, which is to account for being able to select a covered period that ends somewhere between 8 and 24 weeks. So I'll share my screen here and walk you guys through this. So again, it's available on our website. The best advice to give you to get started, if you haven't used this already, is just to kind of take the tabs from left to right and start working through it. And the workbook should kind of populate and gray out cells that should or should not be filled out as you work through the workbook. So start from left to right. The blue tabs really are items that can be found directly in the application. The gray tabs are those that are really supplemental that we put in there for your ease of use. The big change from when we last talked about this workbook really occurs on the instructions and setup tab, where this covered week period used to be an either or. So you got an 8-week period or a 24-week period. We created this to be variable, so you could select something like a 12-week period. And what that does as you work through the workbook is it kind of updates the periods of when you should be entering information. It prorates compensation. So in a 24-week period, employees, you could take up to $46,000 worth of compensation roughly. If you choose a 12-week period, it cuts that amount in half to make sure that you're not taking more credit than you should for any excess employee compensation, which is really just making sure that you don't pay employees more than $100,000 or take credit for paying employees more than $100,000 in your covered period. So it updates cash compensation. It'll update also for non-cash payroll costs and non-payroll costs, things like electricity, rent, gas, those types of things, and it'll kind of gray out for you anything over whatever covered period duration you've selected. So if you've only selected 12 weeks, it'll run out 12 weeks. If you selected 13 weeks, it'll run out 13 weeks. And then the other big impact of that IFR really is on the owner compensation front. So we were allowed to take up to $20,833 or 2.5 months worth of owner's compensation in a 24-week period. We've also kind of built in the model here to limit owner's compensation to a proration of that $20,833 based on when you set your covered period to run for. So once you get up to 11 weeks for owners, if you're paying them at $100,000 rate and you did pay them at that same rate in 2019, you pretty much maxed out the amount of forgiveness you can get for owner compensation. So those are kind of the big things, or the big structural changes, I'll say. We did try to add in at various points throughout this workbook some updates to the language. For instance, when they came out and said that we're not going to receive forgiveness for intercompany rent, we just tried to make notes of those types of things in those fields, so that way it would kind of trigger that decision point for you guys. I guess the only other big structural change was really on the reduction in salary or reduction in hourly rates. So that change, if you reduced employees' salary or hourly rates, essentially you have to extrapolate the impact of that change for a full 24 weeks, regardless of how many weeks you choose you select for your covered period. So if you select a 12-week covered period, you still have to extrapolate out a salary or hour reduction for the full 24-week period. So again, you can download this on our website. If you have questions or need a user guide, feel free to reach out to Denise Asker. Her email is on the introduction page of the workbook. And also Jim's email is there as well. In case you have questions, feel free to reach out to him as well.
And we also have a team that is, we've probably done 20 different reviews where people have put the book together, sent the supporting material, and we reviewed it. We've also done a number of engagements where we've actually gone out in the field and done the preparation for the client. Obviously, different costs associated with the two of those, but it's different ways to get it accomplished. So, by all means, give me a shout out and an email, and we can look at your situation and quote a price if you're interested. A lot of questions coming up. Tim, do you want me to start going through some of the questions that are out there?
I think that sounds pretty good. Let me just go real quick, Jim. I got 2 more slides I want to go through, and then maybe we can start going to some of the questions. I did scan through those while Ben was speaking, but just a real quick discussion on some revisions that occurred from June 17th, when I think our last live event happened. The first one we already talked about, but this seems to be a question that's come up, and we've certainly seen this with our clients who are preparing their own forgiveness applications. I probably saw a half a dozen of these questions. If I'm going to go beyond the 8 weeks and I'm going to be using more expenses than my loan amount, do I need to include all the other expenses? So I have some clients who are strictly reporting payroll because it's the easiest reports for them to get. They go right to their third-party payroll provider. They run the reports. Of course, they got to go through Ben's model to make sure that they eliminate any excess compensation that's occurred during that period. But I think that the applications are now clear that you're just going to include the amounts you want to be considered for forgiveness. And so if you can achieve that with payroll, then just use payroll as that. Again, clarification on the self-employed and owner-employee limits. I'm not going to go through every specific line item. I didn't see anything in there in our questions that would say, hey, we need to go through all 4 scenarios. But there is a difference between a C Corp, employee, owner, an S Corp, a partner, and a sole proprietor on what can be included in that bucket for either the $15,000 or the $20,000 limit. So keep that in mind. And then let me see, this is one of Sarah's comments. Can I apply for loan forgiveness before the end of your covered period? Well, this is interesting because that was the case related back to the June 30th deadline, using that as the safe harbor. But now if you look at the current application, there's a date on your current application. This is the date you're submitted. That's the date where you could still receive your full-time equivalent safe harbor amount. And that's one of the challenges I have with some of the banks. And by the way, I'm not defending nor trying to be critical of the banks. This is complicated stuff. There's a lot of moving parts. But the further the banks push these applications out, the more you've got to be prepared for, well, what does my payroll situation need to be in November if I can't submit my application till then? Will I have enough excess compensation or excess expenses that if I'm at 75% full-time equivalence and I've got a 25% reduction in my forgiveness, can I be prepared for that? So I think you've got to be looking ahead, talking to your banks. The other thing, it's not just did my bank accept my application, but if they're needing the full 60 days to review and you're submitting today, you're not going to get this to the SBA till December. So, factoring in some of those items and a bigger issue would be if they don't look at it for 15, 30 days, could they kick it back for clarifications or questions where it's really not considered a submitted application on, it may not be considered a submitted application on that day. So I think you've got to watch the fact that this could be a moving target for you based on when, how, or if your bank is able to accept your applications. Other things we still don't have. The transportation costs, I get 2 or 3 emails a week on this. The only time transportation costs are even mentioned is in the interim final rule that discusses self-employed individuals, and it throws it in the bucket with other utilities. So we've I've read articles on this. What I've seen is people taking fuel costs for their transportation. So, take that where you want. If you're right on the bubble, maybe the reviewer of your bank documents is going to say, you know what, we haven't seen anybody say that that's allowed. But it is mentioned specifically under the interim final rules for self-employeds that transportation costs are a qualified expenses. And there's still no clarification. How do you demonstrate an inability to return back to business activity? I think that's just one of those ambiguities of how you could certify that I've not been able to return. And by the way, that goes one step closer, because one of the other safe harbors is, were you prevented from returning to that based on some legislative or executive order or some kind of federal guidance that prevented your business from operating? And the last one here, I think I forgot to correct this because Ben, I think you just went through this, how the owner's compensation ends up being adjusted in your formula over the 24-week period. And then I'm going to probably be redundant here where I talk about things to consider. Obviously, talking to your loan, if there's your loan officer, if there's a chance that your loan may not be fully forgiven, how can you ensure that you get a 5-year repayment plan? In particular, if your loan was before June 5th, continue to track your qualified expenses. Have you been doing? I think it's critical that you are aware of everything that you can put in that bucket in case somewhere down the line they go, hey, we think you didn't meet the safe harbor for this person and they're proposing a reduction to your forgiveness. Are you able to easily remedy that? And I think, I can't say this enough, be prepared for any uncertainties and continued changes to the guidance. We've talked about this as partners, Jim and I particularly. We may have a different level of risk, candidly, within this type of work. But one of the things that I think a lot of people are struggling with is something Jim just said a minute ago, which is I can actually, over that 24-week period, have substantially more expenses than I borrowed. And so does that negate my potential reduction for either pay reductions or FTE reductions? And, is that the intent of this? And I'm still a little skittish to say, oh yeah, that's how it's supposed to work. I know that's how it's working now. That's how the application process is presented, and that's exactly how you should be preparing it. I'm more concerned that 2 months from now, somebody goes, wait a minute, you can't get more forgiveness or your expenses can't be more than you borrowed. And yes, there should be a reduction to your forgiveness based on that benchmark against your full-time equivalents or reduction to pay. So I want you all to know we think about this stuff and we talk about it every day.
Tim, one of the things that I guess I was concerned about that as well, but the most recent interim final rule that came out, there's examples on where the bank can stop reviewing. They said, we acknowledge that there's going to be more expenses than the forgiveness and the PPP loan amount. The bank can stop reviewing up to the forgiveness amount. So it basically says they acknowledge that this is happening. I was concerned that it was a loophole that was out there that they haven't gotten around to addressing, but it looks like they're aware of it. They haven't changed the rule. So, previously we were telling people to get their apps in as soon as possible before the rules changed. But it looks like I got a little bit more comfort there on that latest interim final rule. So read that one and you'll see some examples on that.
So we've got 12 minutes, and just like we've done in the past, we have tended to run a little bit long, especially since we've got pretty heavy participation here. So, Ben, has there been a question you've been following or watching that you think we might chime in right now?
Well, I guess I'll kind of summarize. So we were talking about our experience early on as far as being able, or as far as banks that are accepting applications, ability to submit that type of thing. And the response to those questions looks like the audience has pretty much had the same experience than we have. It looks like about 3% of participants have been able to submit their applications to the bank. Another 15% say their bank is not accepting applications. And then the balance either didn't respond or haven't tried yet.
There's also an open question, Tim, on how do you account for the PPP loan on financials at the end of the year if you haven't been able to submit forgiveness application. There is an article on point by Julie Killian on our website, so you can go right into our COVID-19 website. But in essence, there isn't anything for-profit companies specifically GAAP on point, but she addresses a way under GAAP that you have it as a note payable or deferred revenue. And if it's deferred revenue, you have the ability to be able to pick it up on an estimated basis at the end of the year, if you so select to go down that path. If you go the note payable path, you have to leave it until you get actual forgiveness from the SBA. It just depends on what your selection is. But it lays out 4 different selections in their article. Take a look at it and it should get you answer.
Yeah, I think just to clarify that, there really is 3 types of guidance on this, and generally accepted accounting principles allow you to look at other qualifying or other methods that might have better resources or better thought through this issue. And in both cases, you've got, or in the 2 cases that come about here, it's the international accounting standards as well as the accounting for not-for-profits. Both of those would allow you some flexibility. International accounting standards would allow you to accrue the forgiveness during the periods that you've incurred the expenses, and not-for-profit accounting, provided that you had a expectation of full forgiveness, would allow you to record the forgiveness at the time of the note. Now, I just had this conversation with a client. We did discuss the consideration of a reserve or an allowance. Let's say there's a chance they might not get full forgiveness. How did they want to handle that? And so we did discuss maybe considering a reserve against the forgiveness that they're going to be recording in their, what's ultimately their 4th quarter from the time they got their covered loan through their covered period. So hopefully that answers that question. What else we got?
So we have another question on, or asking for clarification on how to prorate owner's compensation if you're not using the full 24-week period. So I think our viewpoint is that essentially you can, I would look at it 2 ways. So if the owner received less than $100,000 in compensation in 2019, I would take the 2019 compensation, divide that by 52, multiply that by the number of weeks in your covered period, and you can't pay him more than that amount, or you can't take credit or get forgiveness for paying him more than that amount in your covered period. If the owner was compensated in excess of $100,000 in 2019, really then it's just looking at $100,000 divided by 52 times the number of weeks in your covered period up to 11 weeks. Once you hit 11 weeks, that owner is capped at $20,833 of compensation. So, yeah.
Okay. Somebody asked the question about, considering the tax interpretation stays as it is there any advantage to waiting to applying for forgiveness until next year? Now, for those of you who aren't aware, you have 10 months to apply for forgiveness. If you do not apply for forgiveness within 10 months, your loan installment begins, okay? And one of the things I may not have mentioned that became clear in some of the FAQs was it's clear now that you have no requirements to make loan payments until your loan is settled through the SBA, and that's either forgiven or not forgiven or partially forgiven. So there's no requirements or responsibilities for payments on these. If you remember, I think in the original loan process and the original loan application, I think there was a 6-month maximum period. Well, they waived that. And so you don't have to worry about making any payments until you get closure with the SBA. But the question here is should you wait until next year to apply for forgiveness? And part of me thinks that's the moot point. If you apply now, you might not get forgiveness till next year anyhow. But more importantly, I think the question would be, is there a risk to you waiting to apply? Because if you look at the application, part of trying to meet a safe harbor amount is meeting the safe harbor for full-time equivalents on the day you apply for forgiveness. So, there could be, is there a risk that you could fall below full forgiveness the longer you wait through December 31st? That to me would be something to consider. More than likely, we're not going to see forgiveness on a lot of these loans till 2021 anymore. And going back to what Jim and I talked about a few minutes ago, We don't know if there'll be a matching concept on this or not. They'd have to legislate that. That would not be how tax law would have it. You'd have income in 1 year or expenses in 1 year, and then this forgiveness of income, which would then ultimately become taxable because you would have already deducted the expenses related to it. So hopefully that answers that question that somebody had there.
Mm-hmm. We have another question on ownership. I think specifically asking if a 5% owner of an LLC would qualify as an owner for purposes of the PPP loan in this case. Yes. I think early on in the process, there wasn't a definition of what an owner was, and then they came out and clarified that somebody that owned 5% or more of partnership, corporation, you name it, is considered an owner for PPP purposes.
And that's different than the 2% that you utilize for purposes of the fringe and compensation. So they're two distinct things. And then there's also a question as to whether you have to use attribution. So we're not sure whether you have to use attribution, meaning you have siblings that are involved or others, whether that comes into play. So just things to consider as you look at that.
Yeah, I think that's a good point, that the 2% shareholders still have to consider the fact that they fall in that realm of their benefits should be included in their wages, and so you can't go beyond the compensation aspect like you can with a C Corp shareholder. A C Corp shareholder gets the full $15,000 or $20,000 of compensation plus their health care plus their retirement payments, whereas the others do not.
But again, I think when you look at the 24-week, what we're finding is the expenses are so high, you got to go through these gyrations. But is the owner comp that important? I guess in a smaller entity, yes. But the bigger the entity, sometimes that owner comp adjustment, whatever you're picking up in there for more than 5% or less than 5%, it's not that much of an impact on forgiveness.
And I do apologize. Today is Wednesday. Today is grass cutting day at my house. You can see I'm not cutting my grass. But I'm in my home office, so if you do hear the lawnmower going by, I apologize. It can't be worse than Jim's microphone, I can tell you that.
Maybe they can come in with a weed whacker and work on that. So.
Yeah. One of the questions, there seems to be a decent theme here about, do I have to provide the 24 weeks of data if I apply early? And the answer to that is no. Your application could cover 9, 10, 11, 12, 13 weeks. You're submitting that application, and on the date of that application, hopefully you've met the requirements for safe harbor for employees in place. You've had no payroll reductions, but there's quite a few people have asked, do I need to provide the 941 or the payroll? And you're not having to wait for the 941 payroll tax returns for this information. I mean, you may have to use your the 1020s or 1032s for the MESC. You may have to provide that support because that's going to be a covered paid, an item paid in the covered period. But 941s might be some ancillary support, but you're gonna get your support from your payroll company's actual payroll reports, not necessarily have to wait until you have a 941 report.
Another question here, Tim, and Ben, you might know the answer to this. Our fund was exhausted in the 19th week, so we will file loan forgiveness application based on 24-week. My question is, shall I enter the date of the 19-week or the 24-week on the covered period on the application, up front? I think when you put in 19 weeks, it'll automatically default to the correct period, right, on your workbook?
In the workbook, yes. On the application, I think you put in the actual length of the covered period. So if she's talking about the physical PDF application, that's one thing, but the workbook will update automatically. Yeah.
So if she's cutting off on the 19th week, she would put the date of the end of the 19th week as the covered period. That's her final. That's the end of her covered period. Does she have forgiveness?
Yeah, end of the covered period, yes, but I think that's different than the date of the application submission. But yeah, it would be the 14 weeks if it was 14
your
weeks.
Covered period is 8 or 24. Your application for forgiveness is early, is what you're doing. You're doing. So that's that. Just to be clear on that, we had some issues on that when that interim final rule, when that first came out, that you go from 8 to 24 weeks. Banks started sending out our clients questionnaires asking, are you going to use 8 weeks or 24 weeks? but we had already deciphered or determined that you could apply early. And so we're thinking, well, no, we're not using either one of those. We're going to use 13 weeks. But within the application process, you're a 24-week covered period if you're going past 8 weeks. And of course, many people are automatically a 24-week covered loan. I think it was June 2nd or 3rd, something like that. Applications after that period were automatically a 24-week application. You're just applying early. We are right at 3 o'clock. I'm not sure. Somebody's asking a question about which applications should you be using. Each one of the way I do this is the easy application has like a 3-part criteria. Jim, I think you kind of laid this out. Do you want to just say what that criteria is real quick?
I was reading one of the questions. What were you asking me?
Somebody's asking, how do you know if you can use the easy application versus the full application?
The easy application, you basically self-employed, independent contractor, or sole proprietor with no employees at the time of the PPP loan app. So that's number one. Number two is the borrower did not reduce the salary hourly wage of any employee by more than 25% during the covered period or the alternative covered period. And the borrower did not reduce the number of employees or the average hours, maybe didn't reduce the FTEs. And obviously you can go to this COVID CDC Health and Human Services, the state shut you down, you can use that as an exemption as well. So that second part doesn't apply, but that's the only situations where you can use the easy.
All right, this is going to be my going once, going twice sold. Let me kind of go through and by the way, just back to housekeeping for those people who haven't participated before. We do stick around online and we do answer all the questions that are proposed, and we do provide them to all participants. So, just a matter of trying to be, Jim and I, for those of you who go back far enough, have hosted our CFO roundtables for 20 plus years. We always had a commitment to make sure we ended on time. With these PPP loans, we asked your permission to go past the hour if we needed to, but also ensure that we would answer as many questions as possible offline so that you could then follow up and take a look at this. I know you're welcome to stay online with us as well to see how we might answer some of those questions, but Denise Asker and Colleen Godlewski, our admin staff and marketing director, will absolutely make sure everybody gets this information. So I'm going to go back to my colleagues, Ben and Jim. Anything you wanted to chime in before we sign off?
I don't think so, Tim.
So let me do my last bit of housekeeping. Can't thank everyone enough for jumping back into these. We certainly understand your frustration having now gone through applications for forgiveness. It's almost like you got to prove you don't qualify, prove you don't qualify, prove you don't qualify, and then all of a sudden you get all these exceptions to then meet the Safe Harbor 2 standard and meet full forgiveness. What none of us are sure right now is the thoroughness that some of these banks and their review team will go through. Some of the small banks are using third parties, and I'm assuming they're using probably even CPAs or companies that deal with data analytics and stuff like that. We're still unsure. I talked to a bank yesterday. He told me none had been kicked back yet. I found that hard to believe considering the rent change that occurred a few weeks back or a month or so back, where it changed everybody's application process. So we're as uneasy with this process as you are. We're trying not to commit to more of these without some substantial changes. Obviously, there's some potential changes to legislation. There could be continued interim final rules that come about that change our perspective or change even the application, as well as frequently asked questions. So we're going to continue to try to stay on top of this. I would say look for our blogs or look for some of the articles that come out where we are addressing some of the SBA literature that comes out sometimes on a daily basis. I know there was a few weeks where they kind of went dark and there really wasn't much going on. October 3rd, they proclaimed that they would start providing forgiveness, but I still have none. Within our firm, I believe we have none. So, take that for what it's worth. Hopefully within your peer group, maybe you've seen some successes, but I'm going to just say stay tuned. We appreciate your participation. We'll continue to answer the questions online, and by all means, don't hesitate to reach out to, again, Denise or Colleen with any questions that maybe didn't get addressed here, or maybe you didn't want to ask. Happy to provide any additional information. So I'm going to thank Jim. Appreciate it very much. And Ben for the diligence on keeping that spreadsheet up to date with all the changes that keep occurring. So appreciate that very much. And hopefully we'll see people out and about, and who knows, maybe we'll be in better spirits the next time we talk. Thanks, everyone.
Thanks, everyone.